Hi and welcome. Thanks for joining us for this presentation on Payday Super, a significant change to how and when superannuation contributions will need to be paid. My name's Beck Harvey and I'm our Senior Manager of Corporate Relationships, and I'm joined by Ben Moles, Head of Employer Solutions at Payday Super, and who brings a deep expertise on Payday Super.
Hi Beck, hello everyone.
We know many employers have heard about Payday Super and many are still working through what it means for them as a business. In this session, we'll provide a clear overview of the changes, why they're being introduced, and what you need to do to prepare ahead of the 1st of July 2026 start date. Before we start, please note that the information provided about Payday Super in this presentation may contain general advice. It's been prepared without taking into account your personal circumstances, objectives, and needs. You should consider the appropriateness of this advice before acting on it. Today's Payday Super information is limited to the provision of factual information only and does not include the provision of financial product advice. Any information we provide to you does not contain a recommendation, opinion, or advice of any kind. Ben, can you just take us through what we're going to cover today?
Sure. Today I'll provide you with a brief overview of Payday Super. In fact, Beck will do that, and then we'll walk through what Payday Super is, why these changes are being introduced, and what employers need to do to prepare. We'll also outline how Payday Super can support you with staying compliant and where you can access information. At the end, we'll cover some frequently asked questions that we're getting from employers.
Before we start today's presentation, Payday Super acknowledges the traditional owners of the lands we are meeting on today. We pay our respects to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. I'd just like to take a moment to share a little bit about Payday Super. Payday Super is a 100% member-owned Queensland-based industry fund, resulting from a merger between LGIA Super, Energy Super, and the acquisition of Suncorp Super. We serve over 340,000 members and we manage more than $37 billion in funds. We received the #1 performing growth option for super and pension over 7 years to the 31st of December 2025. Okay, Ben, let's get started on Payday Super.
Yeah, let's start with a quick overview of Payday Super. Payday Super is a major change to how and when superannuation is paid. From the 1st of July 2026, superannuation will need to be paid at the same time as wages. That's with every pay cycle, whether that's weekly, fortnightly, monthly, etc. This is a significant shift from the current quarterly obligation. With some exceptions, super contributions need to reach employees' superannuation fund within 7 business days of payday. The ATO have also indicated that late or missed payments may attract penalties, and we'll cover that a little bit later on.
The ATO estimates Australians lost more than $5 billion in unpaid super in 2023-24. The introduction of Payday Super will help Australians retire with more by reducing unpaid or underpaid super, ensuring contributions are made with each pay cycle, boosting long-term retirement savings with earlier and more frequent contributions, and providing real-time visibility, allowing employees to easily track their superannuation contributions and entitlements.
This table shows a high-level summary of some of the operational differences today compared to a post-Payday Super environment. The most obvious change is around the frequency of superannuation contributions. At the moment, employers only need to pay once a quarter. This is changing to be in line with every pay cycle, so weekly payers will need to contribute to super weekly. There are currently 28-day allowance from the previous quarter to make your super payments. Under Payday Super, this is being reduced to 7 business days for existing employees and 20 business days for new employees. The compressed timeline also applies to the super fund that you are contributing to. Current funds have up to 20 business days to respond to any errors, and this is being reduced to 3 business days. It's worth noting that the 3 business days forms part of your 7 business day obligation, which highlights the growing importance of error-free submissions. The ATO stapling legislation that has been in place for a few years now, which allows you to check with the ATO if an employee had a stapled fund or account, this continues, and it's proposed that it will refine the process further to allow stapling to be integrated into the onboarding processes. Employers will be able to request a stapled fund and offer this to your employee at the same time of providing a choice of fund form. The Member Validation Request, or MVR, is an exciting new feature that allows you to check an employee's membership of a superannuation fund. This is designed to decrease the instances of employees providing incorrect information, for example, believing they are a member of a superannuation fund when in reality they are not. The feature will help in reducing errors and rejected contributions. Some of this is new to the industry and is currently under development and will likely be delivered through your payroll provider or your employee onboarding solution, or potentially your clearinghouse. Offering this solution through Payday Super's clearinghouse is currently being developed. Another change to the superannuation guarantee, or the SG calculation. Currently it is based on the ordinary time earnings, or OTE, but this is changing also to include salary sacrifice arrangements and a few other updates. Take a look at the ATO website for your information. Under the new SG reporting rules, your payroll system will need to report both the earnings and the super amounts at every pay cycle through the single touch payroll. Most systems will update automatically, but please check with your provider. The payment methods that are currently allowed will continue to be supported with Payday Super. The only change is the enablement of NPP, or the new payments platform, specifically to allow faster movement of money throughout the system. The obligation to comply with this new legislation falls with super funds and clearinghouse providers. You'll need to make sure you are ready for all of these changes by the 1st of July 2026. A lot of you may be wondering what will happen if you'll pay super late or you miss some of the requirements under Payday Super. If contributions are not received with the superannuation fund within the required timeframes, with all of the information needed to allocate to an employee's account, employers may be liable for the superannuation guarantee charge, also known as SGC. That charge includes unpaid super, plus interest, administration fees, and in some cases, a choice loading. And if you don't pay the SGC in the stated notice of 28 days, a late payment may also apply. But please check the ATO website for more information on SGC. So the key message here is that late payments can be costly, and paying and getting your contributions on time and inside the required timeframes is essential. The ATO have recently released on more detail on how it will manage compliance in the first year of Payday Super. The ATO's compliance approach, which recognises that employers who make a genuine effort to comply and resolve issues quickly will generally be considered low risk and should not be the focus of compliance action. If you're preparing early, making contributions on time, and fixing mistakes as soon as possible, the ATO intends to support you through the transition. The key message is prepare now to avoid penalties.
To help make the transition easier, we've pulled together a checklist of practical steps you can work through ahead of Payday Super. So firstly, understand your obligations. Learn what Payday Super means for your business, including paying super with each pay cycle. Check employee and super fund details. With the new contribution timeframes, accuracy of employee and super details becomes critical. This is the time to clean up data and check that everything is current. Update your payroll processes. Ensure your payroll systems calculate super every pay cycle and reports correctly through single touch payroll. Reviewing procedures and reporting. So update workflows, reconciliation steps and internal documentation to reflect Payday Super requirements. Check that your STP data matches your actual super contributions. And plan for some cash flow impacts. Budget for super payments every pay period instead of quarterly. Review your payroll calendar and adjust invoice terms if needed. Consider creating a buffer account for superannuation payments. And check clearinghouse or payroll provider and make sure they're compliant. Payday Super has streamlined its clearinghouse from Quick Super to Super Choice. Super Choice is available at no cost for Payday Super employers. If you're currently using the ATO's Small Business Superannuation Clearinghouse, remember this is going to close permanently after the 30th of June 2026, so users will need to find another option. And train your team. It's important that payroll, finance and HR teams understand the new timing requirements, the new qualifying earning calculation rules, and how to troubleshoot errors quickly. And finally, test everything ahead of time. Test. Complete a trial pay cycle before July to ensure your systems and workflows function correctly. As I'd mentioned earlier, if you're using the ATO Small Business Clearinghouse, you'll need to choose another option with access ending on the 30th of June 2026. And remember, Brighter Super's clearinghouse partner, SuperChoice, is provided at no cost for our employers. And our team are here to help you transition if you need support. Ben, the next couple of slides, can you just take us through how Brighter Super can help you stay compliant for Payday Super?
Sure. Let's start with making your superannuation contributions. As mentioned, Brighter Super has streamlined our clearinghouse services to SuperChoice. One of the primary reasons for transitioning to SuperChoice is to ensure compliance with the requirements of Payday Super. SuperChoice will also be launching some new features for employers who use this platform. SuperChoice is a safe and secure platform with advanced protections to help prevent fraud. The platform is easy to use with quick setup and reporting. SuperChoice has the best error rates in the industry, which helps with the new Payday Super timeframes. Ultimately, Brighter Super will continue to offer employers a clearinghouse to manage all of your superannuation contributions in one easy payment. Provide this service to Brighter Super employers at no cost. Ensure that you have dedicated support for making your superannuation contributions. Ensure that we have the highest standards for managing and protecting these payments into the future. Part of our transition from Quick Super to Clearinghouse to SuperChoice will mean there are some changes for our Quick Super users, and Beck will run through what these mean.
Thanks, Ben. As we covered earlier, to help employers prepare early for Payday Super, Brighter Super's consolidation of clearinghouse services to SuperChoice replaces Quick Super as a partner. Brighter Super will no longer offer access to the Quick Super platform after the 30th of June 2026. SuperChoice is a market-leading clearinghouse, and many of our employers have already transitioned. You're not required to use SuperChoice. You can use any clearinghouse or payroll provider that is Payday Super compliant. However, SuperChoice is provided at no cost for Brighter Super employers. If you'd like to find out more about these changes, you can visit our web pages shown on the screen. There are also recorded webinars that you can watch that covers what you need to do, and please get in touch with our team if you need any support.
On this slide, we bring together the key dates for employers that they need to be aware of as we transition from quarterly superannuation requirements into the Payday Super environment. If we look at the dates on the screen, this shows you the final transition dates for Payday Super. So let's cover that first. First, from the 28th of April 2026, this is the last regular quarterly payment deadline before the new rules begin. It covers super contributions from January to March 2026 from that quarter, and it needs to be paid under the existing quarterly arrangements. If you're using the ATO Small Business Clearinghouse, access to this closes on the 30th of June 2026. Employers will need to have a new arrangement in place at this point. Then, 1 July 2026, Payday Super officially starts from this date. Super must be paid at the same time as wages with every pay cycle. Contributions must reach employees' super funds within 7 business days of payday. Finally, 28th of July 2026. This is the final quarterly super payment deadline. It is important to note that this only covers super on earnings from the April to June 2026. So even though this payment is made in late July, it relates to the pre-Payday Super earnings. From the 1st of July 2026, Payday Super is already live. That means any earnings on 1 July must have a super paid on with each pay cycle and are received by the fund within the required timeframe. The next lot of dates on the line below are relevant to employers who currently use the Quick Super Clearinghouse through Brighter Super. The most important date is the 30th of June 2026. This is the last date you can make your super contributions through Quick Super offered by Brighter Super. From 1 July 2026, Quick Super becomes read-only, meaning you can still view and download your past reports, but you can't submit new contributions. And for the 31st of December 26 is the final date to download and save reports. From 1 January 2027, the Quick Super platform can no longer be accessed through Brighter Super. This is why we're encouraging Quick Super users to transition to their clearinghouse arrangements ahead of the 1st of July 2026.
So with Payday Super fast approaching, here are 3 practical things you should focus on now to get ready. So firstly, understand the new rules. First, take some time to understand what's changing. Make sure your payroll and HR teams are clear on their obligations and how those changes will affect your current setup and the processes you use. Check payroll processes and your employee details. This is the second step. So even if you're using a payday-ready clearinghouse, things like incorrect employer information, missing fund details, or delays in payroll steps can still cause issues. Making sure everything is accurate and running smoothly now can help avoid late or failed payments later. And finally, think about cash flow. Super will need to be paid every pay period rather than quarterly. So planning ahead now can help prevent surprises and make Payday Super easier to manage once it starts. Focusing on these 3 areas now will put you in a strong position well ahead of the July 2026 start date.
Before we go to Q&A, I wanted to highlight the level of support Brighter Super provides employers and their teams. Brighter Super has a highly trained team of employer support specialists and relationship managers. They are definitely specialists in superannuation and are available to help employers with any questions or issues. We also offer employee seminars in the workplace right across Queensland. These cover a range of topics and can be held whenever it suits you and your employees. We support businesses of all sizes.
If you'd like more information about Payday Super, visit our dedicated webpage at brightersuper.com.au/payday, or take a moment and scan the QR code to access the page. You'll find information on the key changes for employers, recorded webinars, frequently asked questions, checklists, and information about Brighter Super's clearinghouse partner, SuperChoice. And remember, we are here to help you. Please contact our team if you have any questions or need any support in understanding the changes. Okay, Ben, we've been putting together a few questions from our employers wanting to understand some of the changes. Let's cover some of those questions to wrap up.
Sounds great.
So firstly, we know that Payday Super changes when you need to pay your super. Are there also changes to how employers need to calculate their super?
Well, broadly, no. OTE and the SG percentage stays at 12%, and OTE is still used to calculate superannuation contributions. However, there is an introduction of a new term called qualified earnings, and that takes into account both OTE and your SG liability at 12% that needs to be paid, along with salary sacrifice contributions. So people who are regularly salary sacrificing through your payroll system, all of that needs to be reported as part of your single touch payroll at each pay cycle into the future, which is a change. Your payroll system should be supporting you with those definition changes and making that available for you to report into the future. Okay, great. Thank you. In my role, I'm out talking to employers all the time. A few of them have been concerned about penalties that may be incurred with Payday Super. Of course, it's a natural thing to be concerned about. Obviously, the frequency and the amount of payments that need to happen in the system will increase. So as I touched on in the presentation, the ATO does have the right to implement a SGC or a charge to employers who don't meet the timeframes. But in the first 12 months of Payday Super, the ATO have indicated they'll take a risk-based approach to compliance. So if you're an employer who is genuinely trying to do the right things, trying to pay your superannuation at the same time of wages, resolving any exceptions around the edges as quickly as you possibly can, I think you can expect that the ATO is not really interested in you, certainly in the initial period. But if you do go to the ATO website for employers out there, you can see the actual definitions of the risk categories that apply to employers. Okay, good, great to know. And what happens if a super fund rejects an employer's contribution? Do they still need to stick to that 7-day timeline? Yes, so the 7-day timeframe includes anything that needs to come back from your superannuation fund. So I think I touched on it in the presentation, but super funds used to have 20 business days to resolve any issues and give feedback to employers or return things. That's dropped to 3 business days. But that 3 business days falls inside the 7 business days. So we're encouraging employers to factor that in and recognise that sometimes there are exceptions which will come back, and that needs to happen within that 7 business day timeframe. Yeah. Some employers are also asking if they'll need to change their payroll system or clearinghouse to be compliant with Payday Super. Will most businesses need to move to a new system? I'd expect not. I think employers need to be aware of what they're using now. talking to their providers and making sure that they are compliant and then making steps forward to be compliant. But on the whole, most payroll providers and clearinghouses will need to be, prepared for Payday Super. So I think it's having those conversations with those providers.
We also know that Payday Super puts more pressure on businesses in terms of cash flow impacts as well, because they have to pay their super more frequently. Are there any measures that employers can take now to start to prepare for that one?
Yes, sure. We can understand that businesses and employers across Australia, who are paying quarterly and have to move to, say, a fortnightly schedule means there is going to be more of an impost upon cash flow. So I think some forecasting would be a good thing to do. Think about what your superannuation liability will be, what frequency you have to pay it based on when you pay your wages, and then kind of have an understanding with what that's going to look like for you next year. I'd encourage you to do that now, so you've got plenty of advance. But there might be things around invoicing terms, talking to your accountant, and other items that you can do to be prepared. But firstly, understanding what the superannuation payment looks like on a regular basis under Payday Super frequencies.
Yep. Just a couple more questions. As an employer, do they need to be worried about my employees' contributions going over the annual contribution or concessional cap?
Well, I think there is a kind of a bit of a unique moment as Payday Super kicks in at the 1st of July. As we touched on the presentation, you can still pay, you can still have some quarterly requirements. You're moving to a more frequent payment cycle. So we're just urging employers to be a little bit careful to make sure that those deductions that they're doing for employees, particularly additional ones, are looked after and will fall inside the contribution caps. We don't expect it to be a large issue, but it's just something to call out.
Yep. And one final question.
Sure.
What's the biggest mistake employers might make?
Well, I think that's easy, and I think the message from today is really that employers need to be working on this. There's really less than 90 days now until Payday Super is live at the 1st of July. So as an employer, we just encourage you to take action, to get on to what you need to do, understand your requirements, use some of the assets that we talk about today or some of the landing pages that are available for you so you can educate you on your requirements, and then ask your providers or ask Payday Super if you're part of our network to any questions that you need clarifying.
Great. Thank you very much for answering all those burning questions that our employers have been asking us. Well, that does bring us to the end of this presentation on Payday Super. The key message is to start preparing now to ensure you're ready for the 1st of July. And if you have any questions about how the changes apply to your business, our Employers Services team is here to help you. Thank you for taking the time to watch this presentation. Thank you, Ben, as well. And we look forward to supporting you as Payday Super approaches. Thank you.
Thank you.